Out itself, Varun Beverages, the stock currently at the low point of trade over the last few trading sessions. It has been at the lower end of the trading range, and that perhaps could be on account of fears that the street has that there could be an increase in the overall tax incidence for carbonated beverages. 28% plus cess goes into 40% minus cess. So let's talk about that itself. We have an exclusive conversation right now lined up with Ravikant Jaipuria, who's the chairman of Varun Beverages, joins us on the phone line to discuss these very factors itself. The first point that we'll discuss with him, the impact of GST rate cut on carbonated beverages. In fact, the GST rate increase for carbonated beverages. Then the second thing we'll see is whether they benefit from the lower rate on water and non-carbonated drinks, which include the likes of fruit juices, etc. And the third, most important, because of the products that they sell, festive season demand outlook and competitive activity right now in the market itself. Thanks a lot, Mr. Jaipuria, for joining in. The street seems to be a little feared about overall increase in tax incidence. So I just wanted your thoughts on 28% plus cess versus 40% GST minus cess. How does that change the overall tax incidence for you on the carbonated beverages side? And on the non-carbonated beverages side, there has been a reduction in water and reduction in taxes for fruit juices, etc. So net-net, would this be a positive for you, no change, or a negative? In all these cases, if you could put a number.
Well, I think it's been a very positive budget for us. I mean, we would have hoped if we could have got even better on CSD. But if you look at it, it used to be 40%, it was 28% plus 12%, and government has again put it at 40%. So there's no change in the soft drink, which is CSD market. But we have got huge benefits on water, which has come down from 18% to 5%, and in our juice and value-added dairy, which has come down from 12 to 5%. And this is about close to 30% of our volume. So on 30% of our volumes, the GST has come down, and which we are going to pass to the consumers, and we feel it is going to fill up the volumes, and this will make us look at how we are going to expand our capacities and take it forward. So I think it's a very positive budget. We would have hoped that it could be even more positive by getting some reduction on CSD, but we are very happy with the budget overall.
Okay, very happy with this rate cuts, Mr. Jaipuria. And 30% of your volumes is where you're going to be seeing that additional benefit, right, coming in. Good afternoon, Mr. Jaipuria. What could that additional benefit be, incremental, anything for FY26 that you could highlight, whether in terms of value or overall in terms of revenue that one could expect to see?
Well, I think revenue, I don't think will change because of this, except with the volumes growing, I think the revenue will automatically change. But I think the capacities will get used, and with 30% of our mix, which is going to be, we are going to pass the consumers with the benefits. I think it will be very positive for the whole industry.
Right, it will be positive for the whole industry. So 70% is, carbonated, 30% is non-carbonated, which is fruit juices and water, on which you get benefit. The other 70%, there has been no change. So net-net, it should be a positive as per your understanding. Could you give us a sense on the overall demand, Mr. Jaipuria? The second quarter for you, which is basically second quarter calendar 2025, saw India volumes decline by 7% due to unseasonal rains. How has the current quarter panned out? And is there any outlook that you can give to us for the festive season, given these rate cuts?
Well, I think this effect will only come by the end of this quarter practically. But overall, this has been an unprecedented year where, the rains, the whole summer has been rained out. And our industry is very seasonal to the point of very relevant to rains and weather. So, but even after looking at that, we've not really had any negative impact, which is very positive. And I think with the little change in the weather, I think we only see upside going. So we don't see any negativity. And I think going forward, we see reasonable growth coming back. And we are looking at further investing and enhancing our production capability.
All right. Just a two-part question, Mr. Jaipuria. One, on the full year, what kind of volume guidance can you give us for the India business? And secondly, you are saying that you will take the incremental savings from GST and put it back into CapEx. what would that number be according to you?
Well, you see, the question is, if you look at it, the first quarter, we grew at close to 15% when the weather was normal. The next second and third quarter, both have been rained out practically. Except September, we still don't know. But otherwise, even with the rained out, we are still looking at flattish numbers, which are very good for the industry after having such heavy rains. And I think as soon as the rains reduce, we see the numbers coming back to normal and double-digit growth coming back.
Right, Mr. Jaipuria. Also, just want to understand, right, in terms of competition. Now, Campa is claiming to have more than 10% market share in few regions that we are highlighting. Now, they are saying, now, what about Coke and Pepsi? Both have responded with lower SKU price points. And what's your outlook now in terms of market share, competitive intensity? How does that shape up for the company? And also in terms of penetration, if you could highlight that now.
See, we are adding penetration every year. We are adding about 8 to 10% more outlets, which is about 400,000 to 500,000 outlets are being added every year. And that's why we are very bullish. And if you look at the industry, there are 13 million FMCG outlets. And we are only reaching to about 4 to 4.5 million outlets. So the scope is so large for everyone, Campa, ourselves, Coke, everyone to grow this industry. And our per caps are still very low in the world. So I think there is no reason to worry with new entrants, and it will only enhance the market. And I think there will be more visi-coolers going in the market, which is chilling equipment, and there will be enough for everyone to grow.
Got it. It will enhance the market, but in the near term, it may impact margins, right? Because of the competitive pricing that we've seen.
It's not impacting our margins. So if you look at our even our last quarter results, our margins have not come down. We are quite healthy and very happy with the margins which are going because our volumes are not coming down. And we have put up large plants which are giving us a lot of capacity utilization is working, and they're giving us margins which are much healthier than with our smaller plants.
So this 28% margins is what you will sustain, right, for the year as well?
Well, 28% was a very high margin, which is, we have never said that. We've always said margins in 20 to 25%. So
okay.
We've never, but we've had very good margins, and if we can continue with these margins and with the growth coming, we'll be very happy.
Got that. Take that point. Thanks a lot, Mr. Jaipuria, for stopping by and giving us an outlook on the overall impact that companies like yours would have because of the GST. So net-net, 70% of your business, which is that of carbonated beverages, has no change in tax. The earlier rate was 28% plus 12% cess. That was 40%. Now that has been subsumed in the new GST, which is 40%. So no change out there. The other 30% that there is, which is water, juices and all the others, on which there has been a reduction from either 12 or 18% down all the way to 5%. And that is something that you believe will be passed on to consumers and be volume positive for you. Thank you so much for that clarity. Take a short break, come back, get you more on the markets and a lot of stock specific action on the other side.